The sale-leaseback, probably the best real estate investment deal you can ever come across if you're lucky enough to do so. Guess what? In this video, I'm going to tell you about one of the greatest sale-leaseback examples that ever occurred, and I'm going to tell you why sale-leasebacks are so awesome, how they work, and how you can go find a sale-leaseback deal for yourself. Welcome back to Confident Real Estate. I'm your host, JC, and I'm about to tell you everything you need to know in a short synopsis of what a sale-leaseback deal is. But there's a price of admission, and that is for you to hit that like button for me to feed that YouTube algorithm because, YouTube's hungry. You got to feed it. And of course, if you're not yet part of our Confident Real Estate family, it's free to join. You just have to hit the subscribe button down below. And of course, it would mean a lot to me to have another member of our Confident Real Estate family. We're giving out free, valuable information every week, and I think it has a lot of great content and value to it, and I hope you do too. Again, if there's anything you want to see us do a video on and cover, leave it down in the comment section below, and we will try to make that happen for you. All right, sale-leasebacks, what are they? Well, it's really exactly what it sounds like. You buy a property that's for sale, and then you lease it back to the person that sold it to you. So why would anyone ever do that? Well, a lot of businesses, they don't want to deal with the maintenance and headaches of owning a property. That's not what they're in the business of. They're not in the real estate business, the landlord business. They just want to have a place to have their doctor practice or their warehouse for shipping or whatever else their business may be. And they're tying up a lot of capital by paying the real estate taxes and the insurance and, of course, the mortgage that they took out, which is another obligation, another guarantee, another responsibility for the owners of that company, and all the money they had to put into the property that they can't then go use to build their business. Makes sense when you think about it. So if it's not yet obvious, the big benefit of a sale-leaseback deal is that you step into a property where you already have a lease in place with a qualified, bona fide tenant. You don't have to spend money marketing it, fixing up the property to attract a tenant, going out there with advertisements, broker fees, commissions, the whole nine, carrying the property, paying the real estate taxes, the insurance, and the mortgage on it, waiting until you get a qualified tenant in there to rent your property. You don't have to do any of that. On day one, you have a signed lease with a bona fide qualified tenant who already built the space out for their own needs. So there is nothing for you to do but collect rent checks. Sounds pretty amazing, doesn't it? And how big do these properties and these sale-leaseback deals go? Pretty freaking substantial. Back in the early 2000s, around 2002, 2003, Sotheby's auction house got caught in a price-fixing scandal with Christie's auction house and I think one or two others. I don't know the details 100%, but that's not so important. What is important is that they had some major fines and penalties to pay and took on a lot of debt. Sotheby's is a massive worldwide auction house with, I think, auction houses in 34 different countries. They will have contemporary art sales, for instance, over a day and an evening that will sell $500 million worth of art in 2 days. Huge. So when they got caught in this price fixing scandal and they had a lot of short-term debt that they needed to pay off and a lot of fines for antitrust actions that came against them, well, they needed cash and they needed cash quickly. The benefit of owning real estate is that you have an asset on your spreadsheet. A beautiful, big, huge headquarter building in Manhattan, New York City. And they were able to go to a major real estate player called RFR Realty. And RFR Realty and Holdings came to save the day for Sotheby's auction house. And how did they do that? They bought the massive headquarters of Sotheby's for $175 million in 2003. And they leased it right back to Sotheby's for a period of up to, I think, 40 years in total, with incremental rent increases built in and options to buy the building back when Sotheby's was ready to do so if they were ready to do so. And guess what? That saved Sotheby's and helped them pay off all their debt, pay off their fines, and continue to expand using that extra $175 million total in cash that they suddenly had in their hands at their disposal because they were able to enter into a sale-leaseback deal to help save their business and grow their business and get them out of a pretty bad situation that could have been the end of a very old, very established auction house. So as a smaller real estate investor who's not ready to spend $175 million on a sale-leaseback deal, how can you go find them? Well, honestly, not a ton of them come to the market. A lot of them are all off-market deals. So look for businesses that operate out of a property that they own and are well established and have been doing great business for a long time. I can tell you personally that I know of a doctor's office in my area, and I got into a conversation with the doctor, and the doctor had a number of practices and was looking to expand even further, but needed the cash to do so. And someone had told him about how sale-leaseback transactions work. And because he knew I was a real estate attorney and investor, he decided to bend my ear about it. And guess what? It was an amazing opportunity to buy a couple of properties that automatically have a lease set up, ready to go with a qualified, bona fide, established medical practice that is continuing to flourish and expand. And to have a doctor who's worth quite a bit as your guarantor on the lease, that's not a bad thing either. And it doesn't require me to do any build out of the space for a medical practice to be housed in, because it's already done and established as a medical practice. And I don't have to go out there and find a broker and find a tenant and go through a lease negotiation for a commercial lease and lease it up. No, we sit down, we look at a lease that we put together, both sides agree on it, and then we close the deal and I buy the property, and on day one the lease is already in effect and I start collecting checks. So go out and look for those established businesses in your area. Talk to your doctor. Talk to somebody who owns a company that may have a few locations in your area. See if they own that property. It might be a real great opportunity for you. Once again, I really appreciate that you watched this video all the way to the end. Of course, hit that like button for me if you didn't in the beginning of the video. And again, if you waited on hitting that subscribe, well, guess what? It's still free. And I think at this point, if you've watched to the end, you felt like you got some value out of this video. And every week, we try to deliver even more value and more aspects of real estate investing that not a lot of other YouTube channels cover. So hit subscribe, hit like. I appreciate you watching to the end. Until next time.